Wow, after learning a lot about banking, let's dig deeper into another concept that could be huge in your financial life: your credit score. A credit score is a number on a scale from 300 to 850 to show how likely you are to repay debt. The higher the score, the better a borrower looks to potential loaners. The group of people that you borrow money from use your credit score to assess how likely you'll be to repay your loan in a timely manner. Now, a credit score can significantly affect your financial life. It plays a key role in a lender's decision to offer you credit, or a sum of money that you eventually pay back. People with credit scores below the good range are usually classified as subprime borrowers. Why should you care? Lending institutions often charge more interest on subprime mortgages because of the higher risk from your low credit score. On the other hand, a credit score of 700 or above is generally considered good and may result in a borrower receiving a lower interest rate, which results in less costs for them. Moving on now, there are two major credit reporting agencies in Canada, Equifax and TransUnion, which report, update, and store consumers' credit histories. There are 5 main factors evaluated when calculating a credit score, which are payment history, total amount owed, length of credit history, types of credit, and new credit. Payment history shows the person's past when it comes to borrowing, and whether a person pays their bills and obligations on time. The total amount owed takes into account the percentage of credit available to a person that's currently being used. Our next factor is the length of credit history. The longer you've been using credit for, the more reliable you'd be, as there's more data about you. The fourth factor is the type of credit that you use, including whether a person has a mix of installment credit, such as car loans or mortgage loans. And finally, new credit measures how many new credit accounts a person has, how many new accounts they've applied for, and when their most recent credit account was opened. Now that you understand everything that contributes and creates your own unique credit score, how do you improve that number? When information is updated on your credit report as a borrower, your credit score can change for the better or the worse. But we want to focus on how you can improve it. So here are some suggestions you can follow. 1. Pay your bills, such as your phone bill or electricity bill, on time. 2. Use your credit line. And what does that mean? If you have credit card accounts, call and inquire about a credit increase. 3. Don't close your credit card account. If you're not using a certain credit card, it's best to stop using it instead of closing the account altogether, because then your credit utilization rate could increase. And 4. Work with credit repair companies to help you negotiate with creditors to increase your score. Now, at the end of it, your credit score ultimately determines how much you save and spend. A high score can provide you with lower interest rates, and vice versa with the low score. But in the future, as you start using credit, we wish you all very high credit scores from being financially responsible.